What up, Devil? Sensei Tutum with the Ethereum Sunday look for you. Did a little poll on Twitter, and thank you guys for participating and viewing the Twitter and just being involved. I'm glad you guys like to listen to my TA and see what I think about the market and potentially learn a little Elliott from me or geometry or whatever it is that I'm throwing out there that day. So thank you guys for being a part of it, and again, also thank you very much for voting for Ethereum. Love this chart. It's my favorite chart to trade in crypto. Yeah, more than Bitcoin. Sure, it's not as liquid, but I just like the chart better. I make money on it, so I like it. Go figure. So let's take a macro look. Since I haven't addressed this on the Twitter yet, or even on the YouTube channel. Actually, little known fact, very little known fact. When I was first asked to start doing videos, one of the first, maybe the second, I did a Litecoin and an Ethereum video. It was one of the first two videos I did, and you guys never saw either of those videos. They were decent, and they were macro looks, but they were long, and we just didn't share them. I didn't want to share them personally because I thought they were awful. But in that video, I called for what I thought would be a $45 bottom, and you know what? Nothing has changed since then, and that was back in late 2018 or so when I made that video. Nothing has changed now, and my count has, I think, changed slightly on the macro degree to fit much better up here. Just being, I have this as a zigzag W X and then Y. I had a little diagonal funky action. This is actually a very difficult count up here, guys, because of a couple reasons. I see a lot of people want to just throw a diagonal on this, call this a diagonal 1, 2, 3, 4, 5. That's you just shouldn't do that. And here's why. And not to say that it couldn't be a slightly rule breaking count, because you see that every once in a while, and we're talking a wick that we break this rule by. And the rule is that in a contracting diagonal, wave 1 should be longer than, well, it should be the longest wave, but it should be longer than wave 3. And I can see right here now that this is already going past that 100, right? So it violates it violates the rules just by a hair, right? So why are you being such a stickler? Well, for one, if you violate the rules at all, why even, and you count that as an Elliott count, why even be an Elliottician? Why even do this form of technical analysis? And really, why would you trade based on that information? Because don't you want to trade on the highest probability outcome? The way you should build an Elliott count is to know the rules and guidelines and the likelihood of different scenarios, so that you can build a count that not only works on the chart and looks right, but also adheres to the rules and guidelines in the highest probable, in the highest probable way. So to break a rule would be low probability, anyway, right? But then in addition to that, if you look, it's an impulsive leading diagonal. And a leading diagonal in itself is considered rare. I find them to be more common in crypto. However, they are considered rare. And they're not, I don't think they are in crypto, but they're not super common. Let's put it that way. But the thing about it is, it would be an impulsive leading diagonal, meaning that each of the actionary waves of the diagonal are impulses. And those are extremely rare, even in crypto. I can think of one in the last year potentially that played out, off the top of my head, and I can't even remember if it did end up playing out that way. So impulsive leading diagonals are super rare, guys. They just don't come up very often. So to take a already very low probability outcome and then violate a rule, go ahead, guys. I mean, go ahead. You can do that. Of course, you can have a higher probability count that just comes out to potentially the same outcome, because what I have, the diagonal count would be an A, B, C. Boom. Correction. Done. Well, what I have is the W, X, and then a Y. And the reason I think that's better, and of course I didn't love this at first, but that's because when you draw the channel of a W, which you just channel a zigzag as you usually would, the X must break as a guideline, not a rule, a guideline, must break the channel of the UW. And if you channel this properly, which I appear to be having a hard time doing, you channel this properly like that, you do get a slight break of the channel by this X wave. And then, so it plays out nicely. And then, of course, if you do a measurement of the W from the length of the X, W from X, you get close to a 1-to-1 relationship on the W and the Y, which is the highest probability relationship. And, these fib numbers are usually close and not exactly on the tick. So that's beautiful and works great. And then you still have, if you're a bull at this point, a, viable technical low here. But if you look at Bitcoin, you really don't, because Bitcoin controls the market. And if Bitcoin tanks, there's no way Ethereum's going to hold itself up, right? So that, and then if you look at this move off of the low, could you make a case that this is impulsive? I don't know. The other coins seem, well, especially the other coins, but a lot, the other coins that don't have a technical low here, potential for a technical low, have a better opportunity to say, you could call them impulses off this low. But this is, to me, very corrective. Oops, what a channel. You just, nothing here is screaming impulsive to me at all. We're trading in it within a range here, within a channel this whole time. And we're barely at the top of that channel. We hit it once and we haven't sniffed it again. Not to say we won't, potentially could. Don't really think we will though. So the count that I originally had for all of this, let's get in a little tighter. Taking the hints in the comments, guys. I know you don't like me to be zoomed out, but I do like to talk about a lot of the price. Anyway, so originally I had this as an A, and then 3, 3, 5 for a B, and then this would be a 5, 3, 5. Or I'm sorry, my phone just distracted me. I was looking for this would be an A, and this would be a B, and then was looking for a C to complete. And we would have completed here. I hadn't been looking at this chart just because I've been doing a lot of EOS work lately. So potentially, I imagine this lined up with where I thought Bitcoin was going to end as well. So it would have been A, flat B, C. Well, my count has changed there, and this is tricky, and this is what I was talking about. This chart isn't without its issues as far as being difficult. What I'm going with now is an A, so still a 5 wave, B for this 3, calling that an ending diagonal C, and there's some issues within the subwave count of this that could give pause to that. However, the preceding or the following price action after has given me sort of confidence that this is actually probably the count. So this would then be a W. Let's just throw it up here. W, and this would be your X, and then working on Y to finish X. Oops, move that there. Let's take the degree down some. Go minuet, change the color. And then we'd have a B, C here, and then going up for another A, B, C. A, this was 5 waves, B, C. And then the way that this is playing out is so ugly. Is this the 1, and then another 1, 2, 1, 2, 1, 2, 3, 4, 5 for a 3, and then down for a 4, up for a 5, or is this a 1 with a flat, and then a 1, 2, 3, 4, 5, still a 3. Any way you look at it, I think that we're in a 4 and have another leg up, and that just so happens to coincide with where I'm at with Bitcoin. And that's not to say that this 4 could potentially be done, because I think we might come back down here and test this level, as a wave 4 usually does. A wave 4 typically ends in the area of wave 4, typically the terminus of the wave 4 of 1 lesser degree. So would not be surprised at all to see this shoot down to here and then potentially make another leg up. Just like in Bitcoin and all the other charts out there, I do think that this is going to happen, that will go up, meander, I say, but I'm not ruling out that we could just die from here. But that's my count for now. Not married to this at all, but would be interested to certainly trade this at this level if we make it. I posted a geometry chart for you guys earlier. Again, I mentioned it earlier, but thinking the lows around $40 to $45. I think I've as low as 18, but we won't go there. I mean, if it gets to 18, back the truck up, because there's such a huge look. Here's the support on 18. Actually, look at that. No, I'm sorry, that's 8 there, but 18's at the top of this range. But there's no chance we get there anyway. Let me get back to, I don't even know why I have this chart open. Let me go to my, where was it? I think I went to Polo just because it had the most data. Yep. Okay, so get rid of this VPVR. Doing this in log just because I found more interesting geometry relationships here. So what we have here is just, it's pretty simple. Actually, we'll go ahead and get rid of everything and redraw it. This is just some fib time. And it really wasn't much tools. So really, first of all, look at this move. Just from a geometry standpoint, we've got these trend lines that are converging, right? So even if you don't like Elliott, I find it hard to believe you're at this point in the video. But if you don't like Elliott and you're just a regular technical analysis guy, well, what's that? What is that in regular TA? What kind of pattern is that? Rising wedge. What does a rising wedge do? Rising wedge breaks to the downside, at least 90% of the wedge, right? So, you're at least getting down to here based on, I'd say 80. I think I had it at 85, just based on regular technical analysis techniques. But yeah, so, and then we would if we draw a pitchfork from these strong pivots up here, and this is a shift. Let me zoom in here. Get this right on. I don't like the trading view has started doing that. I always lock my pitchforks guys after I draw them, just because moving around the chart a lot. As you guys can see, I move the mouse a lot, and you can easily get those off their pivots, and then you might make a bad trading decision on it later on. So always lock those. But I don't like the fact that trading view has started to lock them when you make them. I guess that's if you would lock the last one. So yeah, I find that a little annoying. But we have this nice shift pitchfork where we have come down and clearly reacted on the median, and followed the Andrews principles that you would expect to see. Come down, break to this parallel. And then this is the 1.618 parallel, and then this should be the 2.5 parallel. And just, I drew it there because, as I do with pitchforks, I draw the parallels as they show significance. So this is the 2.5 parallel. We found significance, and then we came up. Look at that, 618 significant again, broke through, hit the outer parallel, retest again, and this is where pitchfork trading comes in to play very much, guys. Once you get rejected here, you can short the retest of it, and then of course once we already had found support here, you could have been out of your position and potentially looked for the long, and then again played around that outer parallel, and now look at this, we're testing the median again. Let's go ahead and get this off. Did we get that? No, we have not gotten that, and I would not be surprised to get that. Didn't realize we were that close. Let's see if that changes anything. See, this is why it's so important to guys to have these things right on the tick when you do draw them. Doesn't change much. We got a little bit further away. But in any event, so I had this pitchfork drawn on here as a very relevant geometric tool. So this median has already shown that it's going to be a resistance again, because look at that wick right there. And even if we come up, hit it, and then close above, doesn't mean we won't, obviously this came down back above, and then, you move around the median line. So just getting above it doesn't mean, okay, bear market's over. But it, if you close above and stay above it, that's a good sign for the bulls. But would not say just getting above it would give you any bullish conviction in your bullish count. And then the other tool I had on here was just simply a fib channel. And the way I drew that was out here, where this was the strong pullback before the last run up, and just drew a channel. Now I just have the outer parallel, just because my typical channels you guys see are that blue color. So I did the 50, the median of the channel, and the outer is the blue that you normally see, and then everything else is a fib within. And then you see here, and this is less, it's not complicated geometry tools. Not that any geometry tool is really complicated. They're pretty simple, and they're useful, especially when you put it in context with Elliott Wave, where we think that this is a W and then X, Y, and then potentially another X. So what happens when we come down? What are we on? So we're finding stiff resistance here. In addition to this median, we have this 382 of this fib channel, and we also have the top of that diagonal trend line that has seemed to be relevant, right? So when we break down, what are we going to do? What are we going to hit? Well, the first stop is going to be this 236 fib level, which has, we've moved in and around it. Should show a little bit of significance. In addition to this, right about the same place, if this breaks down from here, right about the same place as this parallel. So that would be a stopping point, right? So if I was shorting and I was based, if this high, and I was basing my my profit takes, I'd probably have a profit take in this area. And then of course, maybe look to add, find, make a pitchfork or something on the way down. Maybe we even come back and test this. Maybe not. that seems optimistic, I would say. But then from there, you could look to add on your short or just get out altogether. But, where do we ultimately expect to go? This 618 that is shown to be so relevant, right? On that pitchfork, this is the 1.618, and the outer channel, the lower channel. So once we get there, where do we end up? Right around $45, right, guys? So obviously it depends on how it all plays out and time frame and all, but around this time, between here and here, July and November, that could be very well be your be the end of your bear. And of course, I also had a fib time extension here just to compare this correction here with this correction. And you draw the fib time extender. It's the fib time projection tool, just like the price projection tool as well. And as you see right now, we're sort of at a very relevant 2618 relationship. So doesn't mean that too much craziness can happen, but around this area, give or take. I think I drew that wrong. Let's see. High to low. Nope, drew it right. To high. Yep. So around, moved it out just a little bit. Yep. Around this area, give or take, past it, through it, a little bit before it, is where you might expect to see some reaction. So we have a lot of overhead reaction here that dictates that we should get a strong move down. And it doesn't mean that we're going to go make new lows if you're a bull, but you could get your strong retrace at the very least to maybe, if you're bullish, load up down here. I don't know what you would be calling this, because it can't be a diagonal. Wave 3 can't be a failure. Is that a failure? Yeah, that's failure. Wave 3 can't be a failure in a diagonal, and it's a mess. It's a mess. This seems correct to me. If you're a bull, I would still expect a deep retrace, but just based on geometry, based on the Elliott count, based on everything else in the market. But, great coin, great chart to trade. Stiff rejection expected in this area, as we've already seen wicking when we get close to that median. And now and also through this, what's this, the 382 parallel. So price seems to not want to stay above that. So keep it all in mind, boys. And geometry it's an art, and when you go on a macro chart like this and you place it, of course at the hard right edge with the pitchfork tool, there's a lot of rules, and well, let's just say there's there's principles in place on how to use it, and how Andrews himself placed it on the chart. But when you get into more of a trending market, that's when you start throwing on your modifiers and you're seeing which pivots work and what the market is respecting. And that's all geometry is about, is finding the pivots that work for that tool and get a tool on the chart that the price is respecting, because then you can then trust it and base decisions around it. And I think that this is a decent little setup for this chart. So add what you guys want. You put your Gann squares on there, your pitch fans, whatever it is that is your flavor of geometry, and see what you got. And maybe some guys out there have bullish ones. I'd like to see it if you do. Anyway, rambling on now. Toot signing out.